Okay, so what if you could take the entire stock market's mood, all that chaos, and boil it down to just one simple number, a scale from 0 to 100? Well, that's exactly what the Fear and Greed Index does. And today, we're going to dive into how this single number can show us the emotional roller coaster that's really driving prices.
You know, it's really the fundamental question every investor has to ask themselves. Are the prices we see on the screen driven by cold, hard logic, or are they actually just a reflection of some really powerful and, let's be honest, often irrational human emotions?
So to really answer that, we've got to look beneath the surface. We need to explore that hidden emotional current that, believe it or not, is what truly shapes the financial world.
And this hidden current, it actually has a name: market sentiment. The best way to think about it is like the market's emotional temperature. See, it's not really about a company's actual fundamental value. It's all about the collective mood of the crowd, that constant tug of war between optimism and pessimism, or, you guessed it, greed and fear.
Now look, this isn't just some wild guess. There's an entire field of study behind this called behavioral finance. It basically mashes up psychology and economics to figure out why even the smartest, most logical people can make completely irrational decisions with their money the second emotions get involved.
And these emotions, they show up as these predictable mental quirks. Like you've got herd behavior, right? That's when everyone just piles into the same trade at once, which can create those massive bubbles and crashes. Then there's overconfidence, which can get you to take on way too much risk. Oh, and loss aversion. That's the one that makes us hold on to losing stocks for way too long. And of course, confirmation bias, where we only pay attention to news that agrees with us. You put all that together, and you get some seriously wild swings in the market.
Okay, so if we know these powerful emotions are messing with the market, the big question is, can we actually measure them? And the answer is yes. That's exactly where our main tool for today comes into play, the Fear and Greed Index.
And honestly, the real beauty of this index is just how simple it is. It takes all that complex, messy market emotion and just distills it down into one single number on a scale from 0 to 100. Super simple. If the number's low, say between 0 and 24, that means we're in extreme fear. If it's way up high, like 75 to 100, that's extreme greed. It's like a quick, at-a-glance emotional checkup for the whole market.
So you might be wondering, what's actually under the hood here? Well, the index is really a mix of 7 different indicators. For instance, it looks at market volatility using the VIX. You've probably heard of it. It's often called the fear gauge. It also looks at stuff like the demand for risky junk bonds compared to super safe government bonds. When you blend all 7 of these pieces together, you get a surprisingly accurate snapshot of the market's emotional state.
And listen, this isn't just theory. This thing has a proven track record. Think about it. During the 2008 financial crisis, the index bottomed out around 12. Total panic. Then, during those crazy tech rallies in 2017, it spiked up over 80. And get this, in the COVID crash back in March 2020, it hit an all-time low of just 2. Time and time again, it has absolutely nailed these moments of extreme panic and euphoria. All right, so we know what it is, we know how it works. Now for the really important part, right? How can you actually use this thing to make smarter decisions? Let's dive into the strategy.
And it all really starts with that classic quote from Warren Buffett himself. This quote is the absolute core philosophy here. The whole goal is to be a contrarian, to do the opposite of the crowd. You want to be buying when everyone else is freaking out and selling, and you want to be cautious when everyone else is getting way too greedy.
Now the strategy sounds simple, but trust me, it's not always easy to pull off. When that index drops down into extreme fear, that's your signal. It's telling you that panic is everywhere and assets might be seriously oversold, which could be a huge buying opportunity. But on the flip side, when that needle swings all the way over to extreme greed, that's a big flashing warning sign that the market might be getting overheated and is probably due for a correction.
But, and this is super important, there are some crucial rules of the road here. Think of the index as a powerful confirmation tool, okay? But it should never be your one and only signal. And it definitely doesn't replace disciplined risk management. You still have to use stop-loss orders and, not risk your entire account on a single idea. That's just common sense. Okay, before you get too excited and start trading based only on this index, we need a quick reality check. Because while this tool is powerful, it is absolutely not a crystal ball.
It is so important to remember the limitations. For starters, it's a lagging indicator. That means it confirms what's already happening. It doesn't predict what's going to happen. It also gives you that big 30,000-foot view of the entire market, not the nitty-gritty details on any single stock. And that's why the #1 rule, the most important rule, is to never, ever use it in isolation.
All right, let's wrap this up with the key takeaways. First thing to remember, sentiment or emotion is a huge force that drives the markets. Second, the Fear and Greed Index is awesome because it simplifies all that emotion into an easy-to-read scale. Third, it's a proven signal for anyone who wants to be a contrarian investor. And finally, and maybe most importantly, it works best when you combine it with other analysis tools.
And all of that leaves us with the biggest question, doesn't it? You now have a really powerful tool to help you read the market's mood. But the real challenge, the real test, is can you master your own? Thanks so much for joining me for this explainer.